Welcome to Disrupting Japan, straight talk from Japan's most innovative founders and VCs. I'm Tim Romero, and thanks for joining me. Perhaps the most common question my non-Japanese listeners ask me is, what kind of a startup should I start in Japan? And, I want to be helpful. But the answer to that question depends not just on market opportunities, but the skills and the temperament of the specific would-be founder in question. The right question to ask is really, what is the best startup for me personally to start right now? And no one can really know that except for you. And yet, there are some things that remain true and some strategies that remain effective for all people and across decades. Well, today we sit down with Ernie Higa, a man who's kind of a legend among those of us who really study Japan market entry. Ernie brought both Dominoes Pizza and Wendys to Japan, and although both of those ventures seemed like extreme long shots at the time, Ernie made them both work and prosper. Ernie and I talk about how to identify entrepreneurial opportunities, how to know what needs to be localized for the Japanese market and what needs to remain true to the brand, and what so many people misunderstand about brands and branding in Japan. But Ernie tells that story much better than I can. So let's get right to the interview. So we're sitting here with Ernie Higa, the representative director of First Kitchen and Wendys Japan, but best known as the man who first brought Dominoes Pizza to Japan. So thanks for sitting down with us.
Well, thank you, Tim, for having me.
I really appreciate this. I've wanted to get you on the show for a very long time. So you founded Domino's back in 1985, but let's step back a bit before then. Many young founders today are looking to Japan, trying to figure out where they fit in, what value they can add. So in your case, why Japan?
Well, back in those days, Japan was becoming the second largest economy in the world and was really growing fast. So there was opportunity here. Having said that, as an entrepreneur, the last thing you want to do is do something that large companies were already doing. So the idea was to pick a niche business where I felt that I had more of a competitive edge and leverage my understanding of both Japan and the U.S. and learning about Japan, dedicating myself to learning the business here, learning the language, learning the culture, but to find an area where the large companies, say, for example, the Mitsubishis of the world, Mitsu's of the world, were not doing, or they were not so adept. Just to give an example, the first business I got involved in was in the lumber business. In the 1970s, a little bit different than today, there was the U.S.-Japan trade wars. The U.S. companies were trying to figure out how to break into the Japanese marketplace, and there's also some geopolitical pressure as well, too. And one of the things was, in the lumber business, normally the large trading firms would import logs from the United States and have it cut in Japanese sawmills for the Japanese housing size and specifications. But the U.S. said, well, we want the value added done in U.S. sawmills, so we might ban the export of logs to Japan. And of course, that was great, except that in the U.S., houses are built on what they call 2x4 construction. And so there are different sizes, different quality requirements. And the Japanese housing sizes were built upon what they call post and beam. And even further, there was a huge prefabricated home building market that was using lumber, and they had even more difficult sizes, specifications, and so on. And so if the U.S. sawmills could cut those sizes, fine, but none of them could. And so this is an opportunity for someone like myself to say, oh, maybe I'll take on that challenge and see if I can't find a U.S. sawmill or a Canadian sawmill at that time to cut for the Japanese marketplace. And that's really where I started.
So how did you get that insight? Were you involved in the lumber industry before then? Or?
No. When you're an entrepreneur, opportunities just come by chance.
Uh-huh.
And you just have to be looking for that. And then again, see where you can fit in. But by chance, I happened to meet a director of a company called Misao Homes. And in those days, they're the largest end user of lumber in Japan. And so when this potential of the ban of export of logs came about from the U.S. side, Yasawa said, we really need to have our size and our specification cut in the U.S. Otherwise, we'll be out of business. So
there's an opening.
Yeah, so that was an opening, and I got to know the director. Said, we have this issue, and I said, well, maybe I can resolve that. Who knows? I had no background in the lumber business, but I thought it was an opportunity.
Well, I agree. There's a lot of finding the opportunity is just kind of keeping your antenna up and
Right.
looking for them. But when you first came to Japan, did you speak Japanese? Did you have a solid cultural understanding of Japanese business?
Well, that's an interesting question. I guess since I'm of Japanese descent, there was maybe in my upbringing some sense about Japan, but I didn't, I really had to start almost from ground zero when I came here. And I said, okay, if Japan's a difficult market to get involved in, this is what I should try to do. But to do that, obviously, you do have to learn the language. You do have to learn the culture and the ways of doing business here, which are different than the U.S. I will dedicate myself, but I'll give myself 5 years and really work at it and see if I'm able to do that. And then the opportunity with the lumber business came along, so I said, okay, this is what I'll try.
So what's your kind of best advice to so many foreign founders and aspiring founders here in Japan today? A lot of people come here, they work really hard, they're studying every day, but it takes a while. It's not like you can learn the language in a year and do business. So how did you, like on a practical level, how did you compensate for that early on?
Well, you're asking very deep questions, but since I was an entrepreneur, if I didn't learn the language and the culture and the way of doing business very quickly, I would go bankrupt. So I had a lot of incentive to learn it very quickly. So it took a while, but when you're an entrepreneur, timing, luck, and circumstance does play a role.
But I also think, even with the lack of strong language ability, it sounds like if you're solving a big enough problem, the market will work around that. The bigger edge is not the fluency, it is solving a meaningful problem that they can't solve on their own.
Yes, so that's where, for example, if you're a large firm, you say, we don't need to do that. But if you're trying to develop as an entrepreneur new business, then you have to say, okay, there's an opportunity, but there's a lot of issues. Can I resolve it or not? And that was my first entrepreneurial venture where I had to leverage everything I knew, but in a niche area, but it had a big opportunity, but that no one else wanted to do. Unfortunately, the most difficult things is where there's potential for an entrepreneur.
I think that's true. I mean, you have to be doing something that is difficult and or that nobody else wants to do. Otherwise, better funded companies would already be doing it.
They'd be doing it, right. And so going back to your initial question, to do this business, I had to learn not only Japanese, but we started to sell all over Japan, and they have different dialects. And so I had to learn various different Japanese dialects to sell this lumber business. I went the whole 9 yards in terms of really trying to get involved in the language and the culture. And
it's super traditional business as well.
It's very traditional. And so, the interesting thing, because I had to go out to the countryside, whatever, and the fact that I wasn't Japanese was actually kind of a novelty. And so it ended up being an advantage working with these guys in the lumber business who, once we got to know each other, very fun for them.
So identifying a gap in the market, a painful problem, figuring out how to solve it, that makes a lot of sense. But pizza, I can't, because how does pizza fit into this? Because back in the mid-'80s, this was not a problem that needed solving. Japanese people just didn't eat a lot of pizza. It wasn't a thing. I mean, Shakey's was here, I think, but it was small. So what led you to make a big bet on pizza?
I was reading this interesting article about how this person by the name of Tom Monahan acquired the Detroit Tigers, a Major League Baseball team, for at that time, this is in 1983. And it said that what he did is he owned a home delivery pizza business called Dominoes. I'd never heard of it, actually. I said, wow, I didn't know that you could make that much money in the home delivery pizza business. And that was kind of piqued my curiosity. And I had the opportunity to make an appointment to meet with Tom Monahan. And he said, well, I'll meet you at Tiger Stadium, which is in the middle of Detroit. I thought he'd come and pick me up with some kind of limousine or whatever. But while I was waiting, all of a sudden I saw this Domino's logo helicopter come from the sky and landed. And he says, come on, we're going to the head office. And so that was my first impression of Domino's. So this is more than just pizza.
The man knows how to make an impression, that's for sure.
It was yes. That was a big impression. And then we went to his head office in Ann Arbor, and he showed me his classic car collection. He had 400 classic cars. And he said, Ernie, I was able to buy all this with Domino's Pizza. I said, wow.
I mean, but there's lots of incredibly successful businesses and business models that work in the U.S. and Europe that just don't work at all in Japan. So why pizza? What did you see here?
I saw this success. Then he took me to this private island, and it went on and on. He had private jets and so on. So I said, this is something I really want to do. If he's so successful with that, I should try to do this in Japan. But to your earlier point, I thought I should do some market research. And Shakey's had been Japan, actually, done by a large trading firm, and we're not doing well. And Pizza Hut was in Japan, and done by another large trading firm, like they all were. And they were not doing well. And the reason behind that was because they said during the market research, people in Japan don't like pizza. And I said, well, okay, that's a very, broad statement, but are there statistics behind that? And the statistic was the annual per capita consumption of natural cheese in Japan was less than 1 kilogram. And if you compare that to the U.S. at that time, it was 11 or 12 kilograms. So right away, if you don't like natural cheese, you don't like pizza. And that was a kind of common wisdom.
So you were thinking that maybe it's not that Japan doesn't like pizza, it's Japan doesn't like cheese?
Cheese was one thing. But it's amazing now, but they also didn't like Italian food. In the 1980s, of course, McDonald's was successful, KFC was successful. French restaurants are very, very successful then, but Italian restaurants were not. Today, pasta and pizza is like, on every corner. But in those days, Italian food wasn't popular, pizza was not popular. And the thing was that they said they didn't like cheese. And so, obviously, this was a big challenge. But the reason why I talked about how impressed with Tom Monahan, what he was able to do with his wealth, was I said, but if he's that successful, I have to figure out, how I can make this successful in Japan, despite the fact that these large trading companies were not successful with it. And I thought a little bit like my lumber business, though, that if I adapt Domino's Pizza for the Japanese market and consumer, maybe, I can succeed where Shakey's and Pizza Hut were not succeeding. And, this is where there's a lot of negotiations. Domino's Pizza, which is already a large company in the United States, doing billions of dollars of sales and thousands of stores. Their thinking was one size fits all because it's so successful. And I said, you need to adapt for the Japanese market. We can't do it the same way as in the U.S. And in the U.S., they had a formula. It's 12 toppings and 1 drink Coke. But since Japanese don't like pizza, we should think about toppings that the Japanese like. So, pepperoni and Italian sauces actually didn't exist in Japan. I was the first to bring it in. So I thought, I'll keep that.
Really? Okay.
But we would need things like squid. We need things like teriyaki chicken, eggplant, some shrimp. And that's when Tom said, you've lost me. We can't do that.
I can imagine.
We can't do that. We're successful doing billions of dollars. We have a formula and we stick to it. I said, but yeah, Tom, but they don't eat pizza in Japan. And so best thing to do is to come to Japan. I said, well, he wouldn't, but he sent the vice president to Japan. And so the vice president comes to Japan and said, Ernie, all the signs are in Japanese. I said, his name was Bob Cobb. I said, Bob, this is Japan.
The American execs were surprised that the Japanese signs were in Japanese.
That's right. And, they were looking at markets in UK, Australia, and actually Hong Kong, but they're all English signs.
So the localization battle is an uphill one, I take it.
Yeah, and actually, even today it's still relevant. But then they said, there are no street signs. I said, yeah, we don't go by street signs in Japan. We go by landmarks. This is before GPS. And so you have to figure out how do you deliver in 30 minutes. Then they said, this is the success formula. We don't want to change it. And I said, well, okay, I'll tell you what the difference is with the Japanese consumer versus U.S. consumer. If you talk about customer satisfaction, in the U.S. in the fast food business, customer satisfaction is all about volume. You supersize it. In Japan, it's not about volume. It's about quality versus quantity. So we have to increase the quality of our products, of our toppings, and our ingredients. The other thing is customer service. Even fast food business, customer service is second to none. So we had to change the training manuals. But all the successful fast food chains in the U.S. have a common theme because you're dealing with so many part-timers. And the thing is to keep it simple. And I understood that. But in Japan, the consumer likes variety. So the simple formula of Domino's, 12 toppings in one drink, we would not be able to really expand the business here. And the consumer here likes variety. And also they like seasonality for food. So I explained, like, for example, Coca-Cola. In the U.S., they still just sell Coke, maybe Diet Coke, and maybe some Fanta drinks. But in Japan, the number one drink for Coke is not even Coke, it's canned coffee. And varieties of canned coffee. And then tea, and varieties of tea. And then they sell Coke. And they introduce 7 or 80 new drinks every year. And that is because the customer likes variety. And also, the other thing, although food delivery was quite common, they would use flyers, which were like just, very cheap paper and just written words. I said, well, I need to differentiate myself from like a ramen shop or sushi shop that delivers. And so I decided to use 4-color laminated menus that were very expensive, but also explain what is pizza, what is pepperoni, what is Italian, so it didn't exist. But what is Domino's? And I showed the fact that Domino's owned the Detroit Tigers. And then I had all these toppings that were familiar to the Japanese, even though maybe pizza was not. So it got a lot of buzz and a lot of actually free media. I mean, every TV station, every newspaper, every magazine said, what is it? And we just had one store. But they knew that this is a big chain now because I had the pictures and so on the flyer.
But I love that. It is a projection of a much bigger size than is reality, right? It's
it was reality in the U.S., but in Japan, obviously, you're one store. Point was, we're part of the largest home delivery pizza chain in the world, and I think that was an important statement, as well as the fact that you own a Major League Baseball team.
So I can completely understand why this localization is important, but like the big overriding question is, how do you know what to localize and when to stay true to the brand? So for example, like Starbucks, very famously, when they came into Japan, everyone told them you cannot have a non-smoking coffee shop in Japan. It just won't fly. But they stuck to their guns and they kind of redefined what coffee shops were in Japan. So how do you make that call?
Well, first of all, there's no manual or right way or wrong way in terms of, what you maintain about a U.S. brand and what you localize for the Japanese market. So that's a great example of where, in the case of Starbucks, the common wisdom in Japan was, it's a place to also smoke. and so, how can you have a non-smoking coffee shop? The only thing I can say, their whole concept was not a coffee shop, but it was really just what they call the third place. And so that third place environment was really what they're selling. And I guess it was to be able to do your work there and be free of smoke, I guess. But anyway, going back to my case, there's no right or wrong answer, but there always is this think global, act local thing that is critical, particularly when you take a U.S. concept and bring it to Japan. So when I thought about it, you tie up with a U.S. brand because it is successful. It's got a great business model. They had thousands of stores and billions of dollars in sales in the United States. And so what you want to do is maintain what is the success formula of those brands, but yet adapt it for the local market. This is a broad concept. And when it comes to the fast food business, say in the case of Domino's Pizza, the business model was something that I made sure that we had to maintain. It's all about 30-minute delivery, and how do you make a pizza within 2 minutes in the oven in 6 minutes, and then so you have 8 minutes, and then leave the store in 10 minutes and deliver to the farthest place of the business time in 7 minutes. So you have 19 minutes, and if you get lost, you have another 11 minutes to find the home. So, okay, we need to maintain those metrics. The food costs and labor costs have to be so many percentage of sales. There's a business model aspect to this, or, how the structure of banner control. In other words, a supervisor can manage 5, no more than 10 stores. So these kind of structures and these kind of business models work in the U.S. and will work in Japan. So those are things that we did not change.
If I'm understanding right, it's for example, there are certain things that are the core of the brand that define the business itself.
That makes it successful, right, in the United States.
And so the rapid delivery, the simplicity, the repeatability was part of that, but say the specific toppings or the flavor of the mozzarella cheese was not, and so that was flexible.
So where you localize is really where you touch the consumer. So Japanese consumers wanted, of course, U.S. toppings, but also toppings that were Japanese. So where you talk about the product or where you talk about the marketing and the promotion, this is where you touch the consumer. And we're obviously selling to Japanese, not Americans. And this requires localization. And so that's how I looked at it. I said, okay, the business model we have to maintain. Also, a lot of the Dominoes Pizza culture, which is very much American actually in terms of motivating the managers, having all kinds of awards. If you hit a certain amount of sales, you actually got a Rolex watch. These things were never done in the restaurant business in Japan. So there's a lot of incentives and awards and recognition that was very much a Domino's U.S. approach to their business. But where it touches the Japanese consumer in terms of product development or marketing, this is where you have to localize. And the other thing is the size of the pizza in the U.S., everything's big. The portions are big. The pizzas in the U.S. were 12 and 16 inch. That kind of portion would be too big for the Japanese consumer. So we made it 10 and 14. That appealed more, particularly with Japanese women. If you give them huge portions, they say that it's so much I don't want to eat it. Portion size, sometimes in Japan, is not perceived as a value added.
I think that is one of the most interesting differences between American restaurant culture and Japanese. I mean, in America, it seems that larger portions are almost universally seen as better service or a better deal, where in Japan, it can be seen as like missing the mark and like actually like worse service.
Yes, it boils down to customer satisfaction. Certainly in the U.S., it's all about supersizing. But customer satisfaction in Japan is not about supersizing, but about quality. So a higher quality cheese, higher quality toppings. We also had to change the brand positioning. In the U.S., pizza, it's college students and everybody eats pizza.
Yeah, it's kind of a street food.
Right, and frequency is very high, maybe say 3 times a week. In Japan, the equivalent would be a bowl of noodles. They might have it 3 times a week. So the pricing for pizza in the U.S. as well as for a bowl of noodles in Japan is very low. But when I started, people did not eat pizza, so the frequency would be very low. And so if I had a low price and low frequency, then we wouldn't be able to make a business out of it. So I made it at higher prices because I knew we were going to have less frequency. So this was repositioned as a high-end product and accordingly higher prices, but you also have to have high quality. So I use high-quality toppings to convey that. And in the fast food, when you look at this, you divide your customers into 3 segments: heavy users, medium users, and light users. In the States, I would say a heavy user of pizza is maybe 3 times a week. In Japan, our heavy user was once a month. So that's why we had to change the brand positioning. And I thought that, once pizza caught on, and as you start to penetrate the market, then eventually you can maybe, lower prices and go for more of a mass market.
So over the decades since you started that, and pizza has become much more common in Japan, did Domino's maintain that positioning, or did they push down into the lower end of the market?
Since I've sold it, they have gone for, heavy discounts, 2 for 1, and trying to go more for a mass market. They were able to increase sales somewhat, but it's still not like a bowl of noodles.
Getting back to the early days, so when you're running these experiments, when you're trying to decide what to localize, what not, how do you know when it's working? Did it just always work out, or were there times where like, okay, that was a bad idea, we're backing off this? How do you know?
Well, actually, you don't know. I mean, until you try it, particularly in the consumer business. But I'd been living here, understanding, experiencing the Japanese culture and the consumer. And I had a sense of what some of the differences were just by being here. And the thing is, as I mentioned earlier, there's no like manual on this. It's just something that you just have to develop a sense for if you've been in the Japanese market and live here.
But in your case, I mean, you pushed back into headquarters and say, no, we're going to put squid on pizza. We're going to do all of these unique things. So I'm sure, there were some doubts.
Right.
So did the sales take off right away, or how did you know? How did headquarters get that faith in you?
Well, Tim, as an entrepreneur, you also have to be lucky. And so I was lucky that it took off right away. My adaptation for the local market. Also, our sales were very strong. We're selling $30 million a month when I first started versus the average fast food chain was $5 or $6 million a month. So, and one other thing they say is you eat with your eyes. Presentation is very important. So one of the things we also did fit is how you put the toppings on the pizza to make it look pretty. And we also used toppings that had a lot of different color for visual presentation, even in the fast food business. So those are the kind of things that you adapt because that's what the consumer expectation is. The business model, you don't touch that.
That makes sense. I want to ask you more about the importance of branding in Japan, because it's almost common wisdom that if you screw up the market entry, you screw up the brand value, if you pull out of the market, you don't get a second chance. And there's one really famous exception to that, which is Wendy's.
Yeah. Yes.
And so Wendy's exited Japan back in 2008.
Right.
And they've been here for like 30 years. It wasn't a quick in and out. And a few years later, you brought Wendy's back into Japan, and they've been doing great here. So I could ask, how did you do that?
Well, first of all, knock on wood, and again, it's important to be lucky. But Wendy's actually failed twice in Japan.
Oh, really?
Yes. So it's the third time.
Oh my God.
And you could say, third time's the charm. But that is something I thought about. And when Wendy's approached me, I said, well, I don't think so, because you failed twice before. Coming back a third time is very difficult. And they had tied up previously with large companies. The first one was the largest retail company in Japan at the time. The second one is even today the largest restaurant operator in Japan. And after we went back and forth and talked about it, I thought, well, being an entrepreneur, of course, then you say, well, this is quite a challenge. I mean,
Yeah.
And so they asked me, by the way, will you do it? I said, no. But I gave them my story about how you adapt for Japan. I said, maybe they should do these things. And they said, we agree with you. And what do you think? And so I said, well, I don't think so. And then they said, well, are you free for dinner? And I said, well, yes, I am. And while we're eating on my third vodka tonic, I started to see that, okay, this is a challenge. They failed twice before. Maybe if I was entrepreneurial enough, maybe I can find a way to bring it back. And so I think I shouldn't have had the third vodka tonic in hindsight, but I said, yeah, okay, let me think about this. So I did some market research. Because they pulled out twice, there was some negative feedback, but in general, what it did have was brand awareness. And to my surprise, most of it was actually positive.
Really?
Yes. And so I thought, well, okay, then there's a possibility. The main issue, going back to my experience with Domino's, was
to back up, how do you get in that situation? How can you have a proven business model,
right,
a brand with a very positive perception, and not being able to make money with that?
Well, the key thing again, they did not adapt for the Japanese market. They tried to bring the same Wendy's as it was in the U.S. to Japan. So they tied up with large companies, great brand, great business model, but they didn't adapt. And so I said, I will need to adapt it for Japan. But again, I had to fight the battle with the U.S. company.
What kind of localizations and adaptations did you do?
Number one, again, you have to have smaller stores. And in the U.S., Wendy's are big stores and drive-thrus and big kitchens where you don't make money. and all on the first floor. And, so I said, no, we have to go not horizontal, but vertical, because the rent of the first floor is most expensive. Second and third are cheaper. And you don't make any money in the kitchen, so that should be as small as possible. You have to make your money in the customer space. This, of course, is just normal economics. But my real big leap, if you will, is that I saw the opportunity in combining Wendy's with an existing Japanese hamburger chain called First Kitchen, which is owned by Suntory. And I said, they've been in business for 40 years, and they are very localized, but they haven't been growing. And so if I took a local chain like First Kitchen, combined it with a global chain like Wendy's, then I have my global and local.
So when you're talking about combining, I mean, they're different brands. They've got a very different identity. What aspects are being combined?
This is where the market research came in handy. Before I combined it, I did a market research, what was good about First Kitchen and what was not so good about it. And the same thing with the Wendy's stores. I had opened some Wendy's stores standalone before I made this big leap. Originally, they wanted me to open Wendy's just like the U.S. And I said we shouldn't. We agreed that I should adapt for Japan. And then later on, they changed the CEO and they decided to do it just like the U.S., which I knew was...
You're back to square one again, yeah.
So, that's why we had to go back and forth in this thing. And then I decided that the best solution was to combine with an existing chain for various reasons. One was to get to critical mass. The other was to get great locations, but legacy rent. But the other thing is the localization aspect. Before we combined both concepts, we did a market research on the Wendy's stores that we had and the First Kitchen stores. And First Kitchen stores, market research showed that it was 70% heavy to female and 30% male. And our Wendy's stores was 60% male and 40% female.
Why? What accounts for that? Is that just branding, or is that menu, or?
So it has to do with menu. So First Kitchen had a lot of idle time sweets and desserts, and also that pasta, which a female customer prefers pasta, whereas hamburger and meat is mainly male. And that was the strength of First Kitchen. They had variety, they had pasta, and they had a lot of desserts. Their weakness was that they didn't have a strong kind of like, what kind of store was it? They also had hamburger, but it seemed to the consumer just not clear as to what kind of store it was. And also they had a kind of a weak brand identity. Wendy's, because it was here in Japan twice before, people knew Wendy's and they knew it as a hamburger store. But they felt that we didn't have enough variety. And also, we were higher price and First Kitchen was lower priced. So I said, well, if you combine lower price and higher price, and the male and the female customers, and the strong brand identity of Wendy's with the First Kitchen, that's how we can have the global brand and the localization of the menu, but also we combine the brands, which is quite unusual. So it's called it Wendy's First Kitchen. And this is very rare. It's normally franchising and branding is all about brand integrity and keeping it the same. And this is going way beyond my adaptation with Dominoes Pizza, where I kept the brand the same. But as I said, they failed twice before. So I said, okay, we really have to think outside of the box a third time around. Because to your point, they failed twice before. So how do you rebrand and reimage and bring it back again? But in the market research, it also said that one thing that Wendy's and First Kitchen did not have was the concept of the third place that Starbucks did have. So now it's just common sense. But in those days, early days, Starbucks had these charging stations for your mobile, your laptop. So you go there, you can do your work. That's what Starbucks value added was. Neither Wendy's or First Kitchen had that. So I said, okay, we should also include the third place. So we started doing charger stations and made the atmosphere more like a coffee shop atmosphere and used a lot of wood. And the other thing is, because rents are fixed, you want to look at all of the time frames. Hamburgers are very much a lunch business. So we're busy from 12 to 1. And then there's the dinner segment, maybe 5 to 7. But in between, you have this idle time. And that would be great if we could sell out the coffee and the sweets and the snacks that First Kitchen had, but as a third place.
So does positioning in general for a restaurant or a coffee shop, positioning themselves as a third place, is that in conflict with density, the ability to have a lot of customers in the place at one time and to turn people over quickly? Is that a false dichotomy, or is that a trade-off you have to make?
Well, when I did it, there's all those thoughts. But now if you look at the consumer, We cannot be disconnected from our iPhone, our smartphone. Now all stores have to offer, free Wi-Fi. Actually, it's critical for any kind of a retail concept to be able to have that. Particularly if you talk about the younger generation, you'll see that they're on their phones constantly. And of course, the phones will run out of power and they have to, power up. And if you don't have that, they won't come to your store.
So 20 years ago, this was a novel concept, and now it's just table stakes.
You need that.
Yeah.
Yes.
You've been doing business in Japan and the US and kind of acting as a bridge for decades.
Right.
Let me ask you about your thoughts on some of the changes in kind of corporate culture and corporate governance here in Japan. One of the trends we see a lot now is shareholder activism. And there's a lot more focus on shorter term, high returns. How do you see this playing out?
Well, let me go back a little bit to the bubble days. In the bubble days when Japan was taking over the world again, everyone thought they would beat the United States and Japan is number one. People said the reason why Japanese companies are so successful is that they didn't do top-down decision-making, but they did bottom-up decision-making. So they got buy-in from all the people. So implementation would be very smooth. The other thing they said is that they didn't fire people. So the best and brightest would stay in the company because there's loyalty to the company because they weren't fired. And the other thing they said is that the great thing about Japanese companies is they did not look at quarterly profits. So they're looking long-term. Today, they say the problem with Japanese companies, they cannot do top-down decision-making, they can't fire people, and that they don't look at quarterly profits. Really, the answer, I think, is somewhere in between. And when you talk about shareholder activism and so on, Japan or Japanese companies from the 80s, they were so much concerned about the employee and not about the shareholder. On the other hand, the U.S. has a strong emphasis on the shareholder above the employee and more short-term oriented. But the real answer is in between. Japanese companies should be more like the U.S. companies. U.S. companies should be more like the Japanese companies. And it is going in that direction. So I think the Japanese companies now, first of all, under the Abe administration, they had a new governance code to be more geared towards shareholder value. Even the Tokyo Stock Exchange is saying that companies should look at a PBR of 1. That means that their stock price should be at least reflective of their book value. So shareholder activism is more accepted in Japan, and as shareholder activists have been quite successful. But I don't think it should go to the extreme that you have in the United States where it's all about the shareholder.
So you think it's a incremental improvement rather than a radical change in the way of looking at things?
At this point in time. So there's a lot of emphasis now on shareholder value. As the Chinese proverb says, everything in moderation. And I think that Japan's always at one extreme and the U.S. is always at the other extreme. They're both successful in their own ways, but taking the best of both seems to be the right answer because some decisions have to be top-down. If you're doing an M&A transaction, you can't have a bottom consensus building thing. But oftentimes, a lot of decision-making, you do need buy-in for implementation. So you see the value of both. 3 months is not enough to really, make a business plan. Warren Buffett never looked at 3 months. You have to have a longer-term view. But Japan, too long, 10 years.
You can't plan that far out. Things change too quickly.
So I think somewhere in between.
All right.
And we went through recession, deflation, and a lot of issues. But you can't fire people in Japan. That's a tough issue to deal with if your company has some issues. On the other hand, in the United States, even if you're doing well, you can fire companies. And if you're a public company, once you fire people, your share price goes up. That's...
I think with the extremely strong labor rights in Japan, as someone who's run companies, it can be frustrating at times.
Yes.
But on the other hand, that's a big part of that glue that sort of holds society together here.
So one of the things is it engenders loyalty with their employees. So that even if they have an offer with a higher salary elsewhere, they will tend to stay in your company. That is changing, though. That is changing. It is becoming more like the U.S., but not to the extreme. Again, it's somewhere in between. So there's more mobility. And that's, in general, a good thing, actually. But if you have too much mobility, then it is very difficult for a company to keep good people. And just as important to maintain a corporate culture.
Let me zoom down to the other level here, because you've been starting companies in Japan for longer than I have.
I'm older than you, that's why.
But entrepreneurship is something that has also been radically transformed to the point where it didn't used to be socially acceptable at all. Now it is not only socially acceptable, it's considered a good thing. It's got huge support from the national and local governments and Keidanren and business administration. Society's just gotten behind entrepreneurship, which is great. Where do you see entrepreneurship going from here? Is this a plateau? Do you see things going as far as it is in the US, where entrepreneurship is almost a career in and of itself? Or what do you see as the future of startups here?
Well, again, in the United States in the 1950s, the term corporate man was used a lot, and it was lifetime employment, and you joined IBM or Ford or GM until you retired. You didn't jump around, and there was not entrepreneurship until the 1960s when they broke the social contract and started firing people. Then you had great human capital in the United States looking for a job. And that, I think, was the genesis for entrepreneurship in the United States. Okay, I can't get a job with the large companies, which was the usual track for the best and brightest, so I have to start my own business. Well, in Japan, after the war, the economy was devastated. You had great human capital that didn't have a job, couldn't join a company. So that's where, Honda or Sony or Panasonic, they were entrepreneurial companies. They became big. But starting with the 60s and 70s, Japan's economy was growing. And in a growing economy, particularly in Japan, the best and brightest went into government and then went to large companies. And the people that couldn't get it to the establishment ended up opening their own little yakitori store or something. That was the extent of entrepreneurship. That's why it wasn't perceived as prestigious or a great career path. But after the bubble burst, all of a sudden the best and brightest did not have the jobs that they're looking for because the government downsized and the large corporates were downsizing. So you had great human capital all of a sudden saying, well, maybe I should try entrepreneurship.
And also like in the 2000s, especially the Keiretsu group, that implied promise of lifetime employment also started to unravel.
Exactly. And so they started to change the social contract. Not as drastically as the United States, but they did. So someone said, okay, well, we'll start our own business. We don't see a future in joining the government or a large company. And the genie was let out of the bottle. But here's the thing. Japan has become an aging population, and all of a sudden there's a labor shortage. So now the large companies want to hire people, and they're trying to get as much people as they can. But now entrepreneurship has taken a hold.
Yeah, I see what you mean. That genie's not going back in the bottle. No.
And it's actually expanding more than you think. The Japanese government realized that they do need more entrepreneurs to really get the economy to come back stronger.
I think you made a really important point in that. So often people will try to attribute differences between Japan and the US to vague notions of culture but the social forces, the economic forces that drove America to entrepreneurship in the 60s and 70s are very similar to what we're seeing in Japan now, and it's having the same results. It's
a time lag, actually.
Yeah, it's just human beings reacting to the same types of incentives in the same ways.
Yeah, so, they say it's not the strongest or the smartest or the fastest animal that survives. It's the animal that can adapt to change. The smart humans or the smart countries have to adapt to change. Now, when things are going so well, Japan had double-digit growth for a long time. There's no reason to change.
No, you don't want to change anything.
And that was the case in the 1950s for the United States, too. Now change is coming more often. And so they're really dialing up the fact that you really have to adapt to change. Before, like in the consumer business, if you had a hit product, you'd be a hit for at least a couple of years. Now you're lucky if it's a hit for 3 months. There's a constant need for change. But the other thing is the ability to fail and come back and still get people to invest in your company.
Do you that's the point? Do you think that aspect is changing? Because the structural things, there's money being invested, there's people forming companies, but that aversion to failure in Japan, do you see that changing here?
So in the US, an entrepreneur that's failed once or twice or 3 times is a badge of honor, because that means he probably will not want to repeat that again and has learned something. In Japan, as I said, the genie has been let out of the bottle. Entrepreneurship is catching on. Now there are venture capital companies coming in. Ecosystem is still in the early stages, so we don't have all these Silicon Valley unicorns. But I think the biggest issue is accepting failure. This is where the cultural bias comes in. Once you fail in Japan, that's it. You've lost the faith of your customers, your banks, your investors, and it's hard to come back from that.
Wendy's did it.
Yes, but they weren't an entrepreneur. It was a concept. And,
That's true.
Yeah.
All right. Well, Ernie, thank you so much for sitting down with me. I really appreciate it.
Well, Tim, I don't know if I answered all your questions.
And we're back. Ernie made a fantastic point that the best opportunities for founders lies in doing the difficult things. Finding things that are too hard or too risky for the large companies to take on themselves. Now, this is something I've always followed, both as a founder and as an investor. As a founder, doing something that was considered difficult or risky made sales faster, margins higher, and churn lower, since once that problem is solved, the customer would not want to change things. And as an investor, I can tell you that far too many founders, perhaps in their rush to market, focus on the easy parts of a problem and put off solving the hard parts. The problem, of course, is that solving the easy part is rarely a high priority for the customer, and you'll be facing 1,000 other startups rushing into the market also claiming that they've solved the easy parts. In terms of market entry, Ernie's advice to aggressively innovate the product while protecting the core business model is excellent. When I brought a U.S. software startup to Japan, we achieved rapid growth by completely repositioning the offering to target a different set of customers. And Japanese firms do this as well. Uniqlo and Muji both position themselves as more upscale brands overseas than in Japan. But looking at the startup ecosystems in Japan and in America and in Europe, it seems we're a lot more alike than we are different. And as Ernie and I discussed, there are plenty of innovative risk takers in all of these places. Whether the startup ecosystem is booming largely depends on where that country is in this particular cycle. For quite a few decades, things didn't look that great for Japanese founders, but the genie is out of the bottle. Startup innovation has become an integral part of Japanese society, and the opportunities are simply amazing for the current generation of entrepreneurs in Japan. If you want to talk more about market entry or about pizza in Japan, Ernie and I would love to talk with you. So come by disruptingjapan.com/show246 and let's talk about it. And if you enjoy listening to Disrupting Japan, please share a link online or just tell people about it. Disrupting Japan is free forever, and letting people know about it is the absolute best way you can support the podcast. But most of all, thanks for listening. And thank you for letting people interested in Japanese startups and VC know about the show. I'm Tim Romero, and thanks for listening to Disrupting Japan.